Hey, it's Tyrone Jackson, the Wealthy Investor. Today I want to talk to you about a stock market crash in the United States stock market. Now, just before I get started to explain to you what happened in October 2018, one of the things I want you to know is if you like trading in the stock market and making money regardless of direction, do me a favor, click that subscribe button right here so whenever I make a new video, you will get this information. Now, this is interesting. Here's what happened in early October 2018. We saw the Dow Jones Industrial Average pull back because the Federal Reserve decided to raise interest rates. Now, who would think that the Fed raising interest rates would cause a member of the Dow Jones Industrial Average, we're looking at a chart of Visa stock, actually decline? And you'll notice over a 5-day period, the stock went from $147 all the way down because the institution started selling because they live and die by stop loss orders, right? Okay, so here the stock went all the way down to $134 a share. When the Dow pulls back radically because of news on the Fed, guess what? That is what's known as a dip or a buying opportunity. I'll show you why. Notice the screen is red, right? But if we look at a 5-year chart of Visa, it's been an incredible performer. So this is why a lot of people talk about buying on dips or buying in pullbacks, because it's like your favorite stock actually goes on sale. Notice this again. Here's Home Depot, a huge member of the Dow. During that pullback in October, look at this. Stock was $195 a share. It didn't sell off as bad as Visa, but here's the pullback. Why? More of that automated selling. But then again, if we step back and we look at the 5-year chart of Home Depot, 5 years ago, the shares were trading at $76 a share. If you had bought on every single dip, additional shares, you would be up by now. Now, this is stocks that are in the Dow during a pullback, which a lot of people refer to as a crash. It's not a crash because the long-term trend is still higher. Look at Netflix during that same period of time. Here's what I really want you to remember. You have to be careful in your trading in your portfolio. Stocks that are not a member of the Dow Jones Industrial Average, when we have a pullback or crash, they really go down. Netflix at $385. It also pays no dividend, which means you're going to get more of a sell-off, right, from $385 in 5 days down to $323. But even though the stock does not pay a dividend, it's not a member of the Dow Jones Industrial Average, its retracement tends to be dramatic. Why? Here's the 2-year chart. Look, this stock over 2 years went from $127 all the way up to over $400, and it rests now at $321. So there's an advantage to buying these stocks, but look at the 5-year chart. Even better. If you held Netflix shares, you got rich. Okay, I want to take a look at another stock here, not a member of the Dow during the pullback. This is Roku. That online streaming service went from $75 a share, right, all the way down to $56 a share. We're waiting for retracement to happen. So here's what I want you to remember. Look at the 5-year chart. Hey, not so bad, right? Stock is upward trending. Here's what I really want you to remember. Dow stocks protect you when there's a market crash or pullback because they also pay a dividend and they tend not to fall quite as much. Growth stocks, you're always going to have a rougher ride. And when I say growth stocks, I mean stocks that are not a member of the Dow Jones Industrial Average. So where should most of your money be in your trading account? It should be inside what? Mostly Dow stocks. Your allocation should be at least 1/3 Dow stocks. Why? Because over a 5-year period, Visa tends to rise, so does Home Depot and other great stocks in the Dow. Remember, always more money in the Dow than in growth stocks. So thank you for watching this video here at thewealthyinvestor.net. There's a free ebook that I offer if you really want to know more about allocation and, most importantly, our primary strategy cover calls. Just go to thewealthyinvestor.net and download it. It's totally free, and you can see why my approach has proven itself in the markets over time.